Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Friday, February 14th. Overnight trade, we've got the wheat market up roughly a nickel, the corn market up a penny, the bean market's up around 6 cents, the meal market up around 3.50, but the soybean oil market's down around 10 points. We went through yesterday's exercise of export sales, and in combination with that, we also went through an exercise of seeing the Goldman roll and or the index rolls now being completed. As we work our way fast forward, we're also going to run into option expiration next week. We're also going to be running into where people got to get their positions down to 600 contracts in the nearby March contracts, and then at the end of the month we're going to have first notice day. My whole point about bringing this all on up is that this usually has a and or what's going on news-wise a depressing attitude towards the spreads in the nearby, but all we really have going on is a bump now in the nearby wheat, corn, beans, meal, soybean oil, meal making new contract highs in the overnight trade. All the spreads are now starting to get a little bit of a bump on the upside. My whole point in here is that in combination with the sales numbers that we saw yesterday, we're still doing business that is better than what we need to be doing. And as a result, we are not really seeing any more of a decline in our price levels from where we're currently at, that being $4.50 back down to $4, $5.56 wheat back down to $5, and or the bean market trying to go underneath the $13 level back down to the $12.50 or $12 level. What's going to happen going fast forward in here if we are going to continue to go and see that our cash markets are still kind of hot and heavy? Last basis quotes I have for the bean market down at the Gulf is now 110 over. It's been sliding or slipping all the way from 130 down to 85. Now it's back to 110. The meal basis levels continue also to be quite good. The crushing margins continue to be quite good. It all still revolves around the fact that the Argentinians are still not out there selling beans. The Brazilians are doing as best they can, and our bean carry out here in the U.S. continues to shrink. And now that we've got the index roll out of the way, what's going to happen with these March contracts and or our flat price if we're going to go and continue to go and do business and find out that we're squeezing beans because of the other factor that's out there, the farmer sell rate is not out there squashing the cash markets. So anyway, those are the more important things. South America, however, still okay, no other problems down there, be it as far as trying to grow a crop. The movement down in Brazil is still kind of adequate, but the Argentinians are still the ones that are still on the slip side as far as trying to provide added supplies to the marketplace to take away the business from the U.S., which the U.S. is still, how do you want to say it, reciprocating for. Other than that, I thought it was an interesting China story that was out overnight as well, real quick in here. They're talking about a 12 million ton bean crop. So once again, they go and grow corn, they go and import beans, and once again, that supply factor as far as trying to provide them around the world continues on and on and on. Anyway, we got a commitment traders report coming out after the close today. We got an OPA crush coming out on Tuesday. It's a 3-day weekend. After today's close, we won't be back until Monday night. So anyway, these are my opinions, not that of ADM or ADMIS. Thank you.